Welcome back to Fast Money. A major merger in the marijuana industry today. Cresco Labs and Columbia Care announcing a $2 billion deal. The combined company will operate in 16 states plus Puerto Rico and D.C. within the next 5 years. Let's bring in Cresco Labs CEO Charlie Bachtell to discuss the deal. Charlie, great to have you with us.
Good to be with you, Melissa. Thank you.
This gives you an enormous retail presence to your wholesale presence that you already have. And talk to me about margins. Retail margins are better. How will the margins improve in an industry which is seeing margin compression across the board?
It's a great question. And really, the industry is experiencing price compression, and that can lead to margin compression, except there's ways to manage it, right? And we manage margin compression through a couple of different ways. On the wholesale side of our business, it's why we have the brand portfolio structure that we do. So we have a good, better, best structure where we can meet consumers where they want to be met. It allows us to sort of create the products with a margin profile that allows us to keep that durable. But then also that's where that vertically integrated nature of having retail and your own products really helps protect margins. Because of course, if you're growing your own product, producing your own product and selling it on your own shelves, great defensible margins there.
Charlie, it's Tim. Congrats on the deal. Talk about the timing of this deal at a time when I think people have been expecting M&A to get bigger and certainly higher frequency, bigger transactions. This makes you the largest multi-state operator in the country. Talk about timing. Talk about being a leader at a time when the industry at some point will have strategics coming in.
Yeah, I think you hit it on the head. For us, this is the time where you need to make the move that allows you to become the leader in the cannabis space. As you mentioned, this puts us there from the perspective of revenue. But again, it also creates this footprint, right, that allows us access to all of the states that you want to have today and for tomorrow. So we've got growth in the footprint. And as we were talking about a little while ago, with us and our branded product portfolio and retail acumen, now we can really expand our access to our own brands on our own shelves, really continuing to drive growth, establish that leadership position with our number one set of brands, and also the largest retail footprint outside of the state of Florida. Protects margins, allows us to pursue that leadership position at a critical time prior to this inflection point where we get some federal reform here, which we all know is a matter of when, not if.
So, Charlie, I was actually going to ask you about the federal reform. If you look at all the stocks in the group, you've done a great job, and all the stocks look the same way. They got decimated. So congrats on this deal. But when do you think that federal lifeline comes, and what kind of a whiplash is it going to be when you could actually conduct banking like every other corporation in America?
Look, it's a great question. I think it's reasonable to say it is more likely than not, I don't know how much, more than a coin flip, that we're on the path to federal reform in the near future. Still optimistic that it can happen here in 22, potentially after primaries, around midterms. But the momentum is there, right? The conversations are happening in the offices that they need to happen in. And our goal and what we think our sort of objective and our obligation as leaders of this organization is to put the pieces in place for us to establish this leadership position now, keep our heads down and execute the business. So when that inflection point does come, it's the most significant dynamic catalyst that this industry can have.
Are you experiencing a lot of inflation, Charlie, in your input costs, whether it be labor or other things? Are you passing on price increases to consumers?
No, if anything, we're taking the obligation to manage the pricing and still manage our margin profile internally, because really what needs to happen is prices need to come down for consumers. That's going to be the biggest driver of that conversion from the illicit market consumer over to the regulated market. We're seeing some inflation pressure in our inputs, but primarily where we're seeing it right now is in the consumer's wallet. So again, it's on us to make sure we're running efficient businesses so we can create and pass on savings to the consumer base.
So that sounds like further pressure on margins at this point.
Again, it's further pressure on operations and the strategy of the business to make sure we can protect margins while also being able to produce an affordable product for consumers.
Charlie, great to see you. Thank you.
Thanks for having me.
Charlie Bachtell, Cresco Labs. Tim, you like this deal?
I'd like the deal. I'm long the stock of my ETF. I'm long it personally, and I like the fact that they now have 8 states that they operate in, that they've got more than 100 million in revenues. In other words, they have a footprint that I think is very well balanced. Their wholesale business does mean that this is a CPG business that we've all talked about. Everyone says they've got a brand. This is the kind of insulation around margins. You're right to focus on margins because the industry's been, I don't think it's been the federal argument and the lack of progress. I think it's been the margin argument that's pushed cannabis stocks in the last 3 or 4 months down. And I think that's the part that I think there's been a reset. I don't think investors should be investing for the day you get that big federal headline. I think it's a great tailwind, but I think you should be investing in companies that continue to grow their top line, and the addressable market for this industry will still be growing, and leave it with a margin profile that I think is going to be at least as good as booze and other consumer products.
I mean, Charlie, the interesting point that Charlie made, I think, was this notion of migrating the consumer from the illicit market to the legal market, and therefore you have to keep margins down in order to compete with, because consumers have to pay taxes.
The illicit market's running wild. They're not paying taxes. This is the duality of making the essentially the perception of cannabis in this country is it's not an issue for anybody. It should be federally legalized, but it means the illegal market and the illicit market can run rampant. It is, and that's also pushed down cannabis players everywhere.